Hi, folks, and welcome back to Money and Politics. And I know today is not a day that was fun for anyone who's holding Humbl stock. Let me bring up the numbers. It closed at $1.65, down 36.66% on 42.5 million shares, and that's where our average, 10-day average, is 18.5. So that was a sell-off that is significant, not only in price but in volume. So there's no hiding that this was a horrible day to be a shareholder of Humbl. So what are we to make of this? What's going on? I think a couple of things, and the main thing, apparently, is I think this article in Seeking Alpha, the website Seeking Alpha, by the writer who goes by Golden Panda, who made a big thing about the preferred stocks and how he thought that was going to dilute the shares and the value of Humbl. The thing is, those are not going to go out, those preferred shares, into the number of outstanding shares. So that's number one. Okay. Number two, what happened over the weekend? I mean, we were last week at $3.44 on Wednesday. Today we're half that. What did the company do dramatically wrong since last Wednesday? Nothing, right? Now, they came out with the app on Friday, and I believe 22,500 was the last numbers I saw as far as downloading it. Now, some people were critical of the app, and that's perfectly fine. Brian Foote, the CEO of Humbl, said that he wanted feedback, and I would encourage you to go and give him the feedback if you have some things you want that should be added or changed. But to put this in context, first of all, is it going to continue to fall? I always say, and I've always said before, I don't have a crystal ball and you don't either, and no one can say. I think what happened today was panic, partially in the wake of that article. I think partially that you had a lot of people, or a number of people, buying the stock. I don't have any way of knowing really how many when I say a lot, but a number of people were buying the stock, probably playing the momentum game where they thought the stock would go up with the announcement of the release of the app. And then the app came out and they sold, and again, in conjunction with the Panda article. We kind of saw that last week when Brian Foote was on CNBC. It ran up prior to him speaking, and while he was still speaking, we saw the stock price just fell precipitously. Why? Because there are some momentum players. These are not investors. These are people, let me make an analogy to investing in homes. You might be an investor in a home that wants to buy a home and rent it out, or buy a home and live in it. Other people buy a home and flip it. They're looking for a quick trade. It's the same thing in the stock market, okay? So that you have people who are flippers. They're not committed to being Humbl investors for the long haul. As I've talked about this, and I know a lot of you are way down. Now, first of all, you owning the stock, as I say always in the beginning, and I'll put this back up, you get to keep all your gains and you get to take credit for whatever losses. I'm not going to share in your gains and I'm not going to share in your losses. I am sympathetic to when a market goes down. I probably have had a sell-off like this over the years. You try to push those out of your mind. They're certainly not fun. And when I've said before, I put out a video. I want this to be about investing. I'm not looking to be defensive here. I'm trying to say, where do we go from here? I think the metrics, as I said before, the metrics that matter are what is the company doing. Now, if if Brian Foote had dropped dead of a heart attack and the stock went down 36%, you could certainly understand that. But Brian, as far as I know, is perfectly healthy. He still has his team. They got Tickery. They got the app out. They're going to be rolling it out in, as he's already announced, in 3 stages. They're going to tweak it as they go along. No app is ever finished being tweaked. When we who are investors and downloaded the app went on, and we saw different merchants on there who, it just gives us an idea how many different merchants and how many transactions are we going to have over the years. I've never said buy this and try to make a bunch of money in a short amount of time. The thing I have tried to do is tamper down those feelings. Folks, don't be treating this like a penny stock. I've long said I don't look at this as a penny stock. And what I've said is that this is what I call a 3 to 5 year, at least, investment. I've said that repeatedly. The company is only, 5 months old? I bought my first share on December the 8th. So, it's a little over 5 months ago. So for people to be panicking when they've done the merger, they, bought Tickery, they did the deal in Chile, they've got now the app out in the initial draft, for people to be panicking, based on what? This is, to quote FDR, fear for fear itself. Now, earlier today, I put out a graph, and it showed on, a Yahoo graph with about 5 or 6 stocks. And I asked to look at that, do any of you see a straight line here? And of course you didn't. Everyone was going like this. Stocks go up and down. They normally don't go down 36% a day, I'll grant you that. But one of the greatest investors, Peter Lynch, who ran the Fidelity Magellan Fund, and is probably one of the, you might say, the Babe Ruth of stock investors, made some comments back in October of '94 on C-SPAN talking about volatility. Let's take a listen, and I'll come back.
I started buying at 7, but I kept onto it, and it went to 1. And it was the largest position in Magellan in 1978, when it was bought out by $42 by Pepsi-Cola. And I think it would have gone to 400 if they didn't buy it out. I think volatility is terrific.
I should have said he was talking about Taco Bell there and how he bought it at 7 and went down to 1. But he said, I love volatility. Look, volatility, as I said to others, is ultimately your friend. Volatility is what allows us to make a profit, because we can buy now at $1.65, where last week it was $3.44. So if it goes back to where it was last week, you're going to be up 100% from what you would buy here. And if it was a straight line, nothing and going in is you're not going to buy it and just have it going up all the time. If it was a straight line, well, you couldn't make any money. And by the way, I've talked to you before about having your emotions and controlling the emotions, and that what makes a good investor. If you can't stand to have a stock that goes up and down, first of all, remember, you're not buying Coca-Cola here. You're buying a startup. So you're going to have more volatility. It's the nature of the beast. You should be structuring your finances, your portfolio, so that you have cash on hand, so that you have money that is invested that you can afford to keep invested. You don't want to have to be pulling money out to put your kid, pay your kid's tuition for college or something, and then it goes down 36% and you're pulling it out at the wrong time. I hope that's not your situation. If you're putting in money that you can afford to ride, then you're going to be in a position to wait out a crisis. If you call this a crisis, a sell-off like this, certainly a sharp sell-off, certainly one that feels like someone punched you in the gut or kicks you somewhere else that's more sensitive. I get it. This is not fun. This is shocking. It's hard. I remember back in 87 when the overall market fell 25% in one day, 25% of the total market value. Market corrections, either in the overall market or in stocks, are part of the process. Peter Lynch, as he said, talked about volatility, and you want to have ultimately volatility. I started to say, this is where the financial professionals will try to say to you, this is why you need to have a broker. This is why you need to be in mutual funds, because you don't want to have this kind of volatility, because you, as an amateur investor, are going to panic and sell your shares and sell out at the low end, and then you don't participate in the upside ultimately. I can't say if you're going to panic. You have to decide that. But I would say this. I think you in the general sense are all capable. You're smart enough. Investing isn't that hard intellectually. It can be hard emotionally. And this is why I put out videos before. You can look through my past videos and find where I said, mastering your emotions is part of becoming a successful investor. This is the kind of day that lesson applies to. Now, let's talk about where we're going. Is this company Humbl? Are they addressing a need in the world? Yes. Brian Foote just mentioned the other day that there are still something like 75, I forget the exact number he mentioned, 75 or 100 countries in the world where cash is still used for the preponderance of transactions. They're looking to solve that. It is Tickery. Tickery, I believe, did $40 million last year, and that was when COVID was out there. Now, could they do twice that this year? Well, who knows, right? But as we reopen the world stage, it's certainly certainly almost 100% that they're going to do more sales. So you're looking at a company, even in its infancy, and as I said, we're 5 months old, even if in its infancy, has the ability to scale their transactions in peer-to-peer, and that's going to be coming out in a matter of weeks on the app. In buying of concert tickets and other tickets around the world, in merchant transactions. And then that's not even counting if there's some other mergers that they might pick up along the way. So to be sitting here in the middle of April and panicking because one guy wrote an article that said we're going to hell in a handbasket and that this is a convincing chart that isn't worth what it's worth, and he's using financial numbers from 2020. In 2020, I mean, Humbl, it was a flooring company, for God's sakes. We're not buying Humbl because of what it did as Tesoro Enterprises. We're buying it for what it's going to be doing in 2021, 22, 23, and beyond. So, folks, if you want to blame me, go ahead and blame me. If you want to make a comment, here's the address. You can call me a name or you can agree with me. If you want to follow me on Twitter, here it is. I'm just trying to put this in comment. I'm not trying to sound like a cheerleader. I'm really just trying to say nothing really changed in the company since last week. As I've already said, we had this article over the weekend on Seeking Alpha, and we had what I think are some of these flippers. Now, if you're not a stock flipper, then, the last time Humbl was down at this price, and if you adjust for the reverse split, you're down to about 40 cents or so. I remember when seemed just not that long ago, that 40 cents was like we were really hitting the heights. I know some of you, because you've commented, got in at $6 or $7. It'll take you a while to get back to that. I grant you. But this company, as a startup, and you saw how much it went down in one day, okay, going down 36%. It's also possible to see days where it could go up just as much. In fact, right after the reverse split, I think we were up on numbers like this. I'd have to go back and check exactly. I don't want to be inaccurate. But we were up dramatically right after the reverse split. Volatility in the price of Humbl is going to be your partner for probably the better part of this year until we start to stabilize. But we are in the early innings of the history of this company, okay? 5 months old. And it existed as, as a private company before the merger, but Humbl is brand new. And so we're going to have volatility. And I think we're going to see exceptional growth and market penetration around the world over the course of this year. I am waiting predominantly to see the second quarter earnings in July. And by the way, speaking of, I meant to mention, look at the ETXs and the reception that has had. So when we get to July, we will have had the second quarter that we can look at the numbers. And it's only then that we're going to have some firm metrics or metrics that are even beginning to firm up. Right now, as a startup, you're buying the promise. Right now, you're looking at the story and the team with Brian Foote and his team. And are they executing? Yes. Are they rolling out the product as they said? Yes. They got the ETXs out. They got the app out. They bought Tickery. They did the merger. To think you should throw in the towel 5 months into the game is, to me, premature. Panicking doesn't make you money. I've said that before. And I've said before, we are not on a 100-yard dash to wealth. We're on a 26-mile marathon, okay? So, folks, I don't have a different story I come to you with every night. I don't make this stuff up every night. The only thing I'm saying tonight that's new that I didn't say before is referring to this, what do you call it, Golden Panda story, the story that why this one guy thought Humbl wasn't a good investment. I think a lot of us think otherwise. I think we have good reason to think otherwise. So that's the story from how I see it. I'm sorry for those of you who are new to this. And as I said, this channel is for the new investors. And I know this is a kick in the groin, okay? So I'm sympathetic to it. But frankly, you have to go through these kind of episodes. And believe me, I've been kicked in the groin a number of times over 40 years in the investment field. You have to go through this to get your emotional calluses to where you can kind of tough it out. I was, by the way, and I'll close with this, I was watching a documentary on Ulysses Grant, and the general, of course, in the Second World War, who later became president. And they were talking at the Battle of Shiloh. And on the Battle of Shiloh, it was a 2-day battle along the riverfront down in Tennessee. And William Tecumseh Sherman came up to Grant at the end of the first day, and they got their ass kicked. The Union forces were almost pushed back into the river. And Grant was sitting under a tree, and Sherman said, "Well, Grant, today's was, we had the devil handed to us," or words to that effect. And Grant said, "Yep, but we'll lick them tomorrow." I say that because you have to have that kind of determination. In war, Grant took the long run, the long view. And you're going to lose some battles, but you don't lose the war unless you panic and run and throw in the towel. And then when you sell out at a loss, you're registering the loss. I bought today. I didn't sell. I'm going to hold on. You have to make your own decisions and do what's right for you. But I would hope that at the very least you don't panic, that you still take what I'm saying, look at the company. Is it growing? Is it doing what we had talked about all these months since I started doing these videos back in January? And I would say yes. So to take the word of one guy who writes an article, who isn't associated with the company, I mean, you can look at that and value that as you wish. I'm not putting a whole lot of stock on it. I'm putting more stock in the Humbl, and I think I'll, in the long run, be richly rewarded. So as always, folks, I'll be here on the bad days. I'll be here on the good days, and let's stay in touch. Send me messages either on YouTube or through email or on Twitter. And in the meantime, take care. Try to lick your wounds. Tomorrow's another day, and we'll go back to it. And we'll see you then.